that is buying a car. So, when it actually comes to buying a car, people are often confused by some aspects of the process, which can result in miscalculating the true cost of ownership. And did you know that over 7 million Americans are currently behind on their car payments? So, if you fit into that boat, or if you know somebody that may be struggling or suffering, you're not alone. A lot more goes into the price of a car than just the listed price. In fact, the final purchase price of a car could be as much as 10% more than the listed price when all the fees and the taxes and the payment arrangements have been fully calculated. So, today we will actually learn more about the hidden costs of buying a car and learn how to tell how much car you can afford and what different payment options are available to you. So, moving right along to the next slide, the true cost of owning a vehicle. As you can see, there are many extra costs to owning a vehicle besides just the price of the car. So, let's see if you can come up with some of these costs. Well, they are your annual percentage rate. That also includes your dealer fees, title and registration fees that you have to pay to the state, sales tax as well that has to be paid towards the state, and any add-ons, which are additional features that you may add, such as, motorized window, sunroof, leather, and safety and security features. You should also consider the cost of operating a vehicle, and these include your insurance, your gas, even maintenance costs such as oil changes, tires, so on and so forth. And then, of course, as you can see, just by those few costs, owning a car already sounds like it can certainly be expensive. A great way to make sure that you get what you need when you buy a vehicle is to become more knowledgeable about the car buying process. And being informed may help you get the best deal and may save you from being overwhelmed or surprised when you start shopping. And this is what we're going to work on today. Part of being informed means understanding your own needs and the budget that you have before you even start shopping. So, as we transition to the next slide on our must haves versus our nice to haves, I want to just go into a little bit more detail of what that means. Must haves are features that you cannot do without. These must haves should be determined by your individual needs. So, for example, I travel a lot, so fuel efficiency and good gas mileage is very important to me. It is a must have. As a matter of fact, when I looked for a vehicle, I purchased one that had flex fuel because at the time, flex fuel was the most affordable fuel on the market, which in turn helped me lower my fuel costs. I also have children, so safety features included in my vehicle was a must have for me. And a must have could also relate to your vehicle's reviews. Maybe you'll only consider cars that have good reviews for quality. For example, those who have kids really like Subarus for that reason. Nice to haves, on the other hand, include things such as the color, the make, and the model of the car you want. It could also be add-ons such as your Bluetooth, your GPS, and even a backup camera. So you can take an inventory of your personal must-haves versus nice-to-haves at your convenience on your participants guide on page 3. So as we transition to the next slide, and we have a clear understanding of what we should focus on when we're shopping for a new car, I want to talk about the actual cost of buying and owning a car. And this information will help you create your own car budget. The first thing we'll look at is the cost of just purchasing a car. Here's what happens to many people. You see a car being advertised for this certain price and you think, okay, that sounds like a good deal. Car dealers may advertise, for example, a discount off of MSRP, which is the manufacturer's suggested retail price, or even a rebate, which is a cashback on your purchase. And you might think, wow, that is such a good deal. I should go talk to that salesperson today. But this is a great advertising technique because it gets people to meet with a salesperson, but it may not tell the full story. You see, the advertised price is not what the vehicle will cost you at the end of the sale. And many additional charges, what is sometimes like we like to call the fine print, are added on at the end. And I'll list some of the other costs that may be included in the final price of the car. But some of these terms, they may even be new to you. Don't worry about memorizing them or taking notes. We actually have include a glossary in the back of your participant's guide on page 12. So you can refer to that at your convenience. And when you buy a new car, there are many extras that go into the final price. First, there's the base price. Then you have the add-ons like running lights, four-wheel drive, GPS. And then, of course, there's the extended warranty or extra warranty coverage that kicks in when the manufacturer's warranty expires. And when you purchase a newer used car, the following fees may also be included. There's the dealer fees, the sales taxes, and then, of course, registration, DMV fees, and title fees. You may also be charged administration fees, filing fees, documentation fees, and all these extra fees that the dealer and the manufacturer may charge to cover their own costs. So while you think you're buying a car for $18,999 because that's what was advertised and that's the price that got your attention, the car may wind up costing over $20,000 once the additional charges and fees are added in. If you don't pay cash for the car up front, you'll need to get financing from a dealer or a loan from a financial institution, such as Neighborhood Credit Union. Each month, you'll pay a financial institution or servicer a portion of the total cost of the vehicle plus any interest and fees that are charged for them providing you the loan or financing contract. And we'll go into auto loans in more detail later in the course. What's important right now to understand is that you also need to consider the cost of getting a loan or financing a car when you determine how much car you can afford. So just to give you an idea of what you could be paying a month for a car payment, according to Experian's State of the Automotive Finance Market Report from 2018, the average monthly payment on a new car was about $500. Hopefully not 5,000. That's $500 a month when you finance a car. But there's actually more. You can't forget about the cost of owning a car, right? So as we transition to the next slide, you can see here the cost of owning a car. So some of the costs may be obvious to you, right? You're going to need that gas or even electricity to operate the car. Then, of course, every year you have to renew your registration with the state. And then there's the basic maintenance fees for your car, such as oil changes, tire rotations, new tires, filters, and so on and so forth. So what does it all add up to? Well, according to AAA, the average cost of owning a new vehicle in 2020, and this does not include car insurance, was about $9,561 for the year. The most affordable vehicles are the small sedans, and the most expensive are the pickup trucks. Electric vehicles have the lowest annual maintenance and repair costs of all vehicle classes and have very low fuel costs. The reason they are the most affordable is because they have higher than average depreciation. So if we simply focus on out-of-pocket costs, the average yearly cost for maintenance repair is $1,186, and the average yearly fuel cost is about $1,500. So that comes to $2,686 for the year, which works out to be an average of about $225 per month. And some of us may be paying more. And then, of course, there's auto insurance. Car insurance rates do vary by company, state, and of course, driving record. And most statistics say the average monthly insurance payment is about $100 a month. But in many states, you are required to show proof of insurance for your car before you're allowed to drive it, like Texas. So this is a must have. And I feel like in Texas, we're all paying at least $300 a month for auto insurance. It's very expensive. So now that we've reviewed the average cost of owning a car, I'm going to add it up for you. Well, when we're putting it all together on the next slide, as you can see, with the loan payments, the maintenance and fuel, and the insurance, it could be up to $825. And that's a lot. But remember, you may not have to pay that amount. And we'll discuss some strategies for lowering payments. And then you can also refer to page 4 on your participant's guide at your convenience, which is costs of buying and owning a vehicle. Now, before we move into our next slide, I would like to share a short video with you all from WFAA News Channel 8. They did a really great article in regards to the state of car buying. So I am going to mute my mic and let's tune in now.
Well, what a ride. When we look back at used car prices over the last year, we have come quite a ways up. For the 4th straight month, the wholesale cost of used vehicles just went up again. It's risen more than 20% since last August, almost 47% higher when you compare December 2020 to 2021. Those higher wholesale prices paid by dealers often translate, you guessed it, to higher retail prices that we pay. One analysis last year found that Texans were spending the 6th highest amount in the country for used autos. Nationwide, the average secondhand car just hit a record high of more than $27,000. The average monthly payment, $520 for 70 months for used cars. And since dealers were paying more in recent months, we could see even more sticker shock when those vehicles hit the lots. In the latest batch sold wholesale, vans passed all other autos in price increases. Pickups picked up the least. That might be good to know if you are shopping in the months ahead. Used car prices may not go down until we see a huge increase in new car manufacturing, and that's not going to happen until we have a lot more computer chips being made. Goldman Sachs shows just how smart our cars have become over the years. They explained that a typical 2021 model had 298 computer chips inside it. And because we're still in a pandemic chip shortage, Sachs is expecting the shortage of new cars to continue through the middle of this year. So use caution. Take care of your ride because we could yet see another steep grade ahead for used car prices. As always, your destination for more info about this is in today's post at Jason Wheeler TV on Facebook and Twitter. And look out ahead later this week, some new info on forced financing at the dealership. I am still on that to keep you right on the money.
All right. Thank you so much, Roxanne, for sharing that excellent WFAA news article. And it is so shocking to me. I had no idea that it would take almost 300 chips to put together a new vehicle. So you can imagine why the cost of vehicles just keeps skyrocketing. So on the next slide, there's just a brief opportunity for you to see an example of a budget, but you can actually utilize your participant's guide to put together your own budget. I just wanted you to see this as an example of your monthly car payment, how you can calculate it based on your car insurance and your maintenance and fuel payments. So moving right along. So many of us may not plan to be paying cash for a car. So this means you have the full amount of if you do pay cash for the car, you have the full amount of the vehicle's price on hand and you won't need financing. But for many of us, that's nearly impossible. Paying in cash may be the best way to pay for a car because you own the car immediately and you won't be charged any various finance charges or interest for financing. However, most people, like myself, are unable to pay for a vehicle outright. In fact, 85% of buyers use some form of financing to buy a car. And we are going to briefly discuss those different payment options. We've included the information for each payment option in the resources section of your participant's guide on page 7. So you can review that at your convenience, but I'll just go over the basics now. So first, again, cash. If you're able to, using cash is a great way to purchase the vehicle. This way, the car is paid off right up front and ownership is immediate. Next, we have direct lending. That's when you go to a financial institution such as a bank or a credit union like Neighborhood Credit Union to get your loan directly from us. This is a great way to purchase because you can sit down and speak with one of our advisors to find out what you can afford, get the best deal, and the right amount to fit your budget. Next is dealer financing. And as you heard in the previous video, there may be some forced financing that comes through dealerships. So when you are financing through a dealership, make sure that you are fully agreed to pay whatever those finance charges are. Dealer financing, although it's convenient because it takes place at the same time you buy the car, you may want to negotiate those financing terms to make sure you're getting the best price. And then, of course, there's leasing. When you're leasing, it's more like renting than buying. You don't own the car, so you can't actually sell it. And there are many rules that follow during the terms of the lease. So you know now how much you can afford in a vehicle and the different payment options. Most of us will probably need to use some sort of financing or lending when we buy a vehicle. In the next section, we'll actually cover what to do to prepare for financing or lending, particularly what you can do to make sure you're getting the best deal and your monthly payments are as low as possible. If you're able to pay cash for your purchase, this section may not be as relevant to your car buying experience. However, the information we're going to discuss, it actually can be applied to any loan. So that's from your credit cards to even a home mortgage. And generally, the less you need to borrow, the lower your monthly payment may be. And there are 2 ways to reduce the amount you need to borrow. You can make a down payment or trade in another vehicle, or you can do both. And before we get into all of that, there is another short video. I'm going to pass it over to Roxanne to bring it up. It's the second part of that WFAA news article, and it talks about the dealer financing. So I'm going to mute my mic now.
We have some new dispatches from the forced financing frontier. Would not accept my pre-approved financing, would not allow me to use my credit union check, wanted me to use in-house financing. We were forced to use their financing at 7% interest. These are from the latest batch of consumer complaints to the state regulator that oversees auto dealerships in Texas. A refresher here, that regulator was concerned when I told them about dealers refusing outside financing, insisting instead that you use the lenders they work with. with. It is no secret when a dealer works out a loan with its preferred lenders, the dealer can add on to the financing rate and pocket some extra profit. There is no state law against this, but as I have been exclusively reporting, the Texas Office of Consumer Credit Commissioner has been asking for your complaints about this practice, and they've been investigating. And dealers have to respond to those investigations. I've been seeing an interesting trend in the dealer replies. They take outside financing, cash, bank, and credit union. They don't require to use their financing. Over and over, different dealers basically saying, we're not doing what these consumers say we're doing. And over, the investigation ends there if the complaining consumer doesn't have documentation. It was your word against theirs, essentially. So get their words in writing. I've actually been through this myself. In fact, in today's article online, I go into that more and share the actual texts that helped me to resolve it and get the car. Some advice: start your shopping online, email them, text them, tell them you have outside financing, ask if that's cool. If they say no, you've got it in writing. If they say yes, you go there, and then they tell you no, follow up with them about that in an email or a text. Now, some of you are getting around this by accepting the dealer loan and then immediately refinancing with your pre-approving lender. It's complicated. There are potential pitfalls there too, though. Some critical info about that at Jason Wheeler TV on Facebook and Twitter in today's post there. And stay tuned. I'm reaching out now to the feds and to automakers that dealers are affiliated with for their response on forced financing. Some updates soon to keep you riding right on the money.
You ever wondered?
Thank you very much, Roxanne. So as you can see, you have to be very careful. There are so many predators out there. You want to make sure that you are in the know. And I hope that those tips were just as helpful to you as they were to me. So as we move forward into our next slide, we're going to talk a little bit about down payments and trade-ins. With a down payment, usually this is your cash that you put up front towards the overall cost of the car. The more you can pay in cash, the less you'll have to pay overall. Some lenders will actually require you to pay a percentage of the sale price up front. A few years ago, this was as much as 20% down. Now, required down payments are as low as 9%, and some lenders don't even require a down payment at all. Next, there's trade-ins, and that's when you offer your old car as part of your down payment. Now, the question is, what if I still owe a lender for my current vehicle? Can I trade it in? Yes, you can. But it's best if you owe less on the vehicle than it's worth. Otherwise, the dealer may factor it into the financing agreement, which will increase your loan amount because you're borrowing the combined cost of the new car and your old car. So next, we are going to talk about something that's really important for you to understand. It's your credit worthiness. Your credit worthiness is how lenders determine how likely you are to pay back a loan. And it's based on many factors, which include your credit history, as well as information that they collect from credit bureaus that's put on your credit report that's used to determine your credit score. Lenders may look at your credit score when deciding whether to offer you a loan, and if so, what interest rates they'll charge. If you have a lower credit score, lenders may refuse to lend you money or may charge you higher interest rates. On the other hand, if you have excellent credit, you may be able to negotiate lower interest rates. And generally, the lower your interest rate, the less money you'll have to pay the overall to the lender overall. So since the information on your credit report is what's used by lenders to determine some loan terms, it's very important that you know what's on it. And you're legally entitled to receive a free credit report from each of the 3 credit reporting bureaus every year. You can order them online or even over the phone. We have provided the resources for you in the section entitled on page 8 of your participants guide entitled resources. Okay, so you can review that at your convenience. And ordering your credit report is the first step. Once you've received the report, you're going to need to review the information to make sure it's all correct. And the information contained on these reports is being used to evaluate your credit worthiness. So an error on your report may affect your ability to get a loan or even competitive interest rates in general. So if you find an error, contact the lender where the error is listed. For instance, if a credit card incorrectly reported that you missed a payment, contact that credit card company and explain the mistake. Follow up with each credit reporting bureau that's listed the error and ensure that it's fixed. And we've provided those additional resources as well in the section entitled Checking for Errors on your participants guide. So your credit score will not be listed on your credit report. To learn more about obtaining your credit score, start by visiting the websites of the 3 major credit bureaus. Some financial institutions like banks or credit card companies provide their customers with credit scores. Contact yours or another institution to see if they can provide this service to you. And once you've obtained that credit score, you can record it in your participants guide on page 5 that's entitled My Credit Score. And knowing your credit score will give you an understanding of your negotiating power. Generally, the higher your score, the more likely it is that you'll be able to negotiate better financing terms. Lenders may use the information on your credit report to calculate your debt to income ratio, which is also known as the DTI. And as you can see here on the slide, your monthly debts divided by your gross monthly income is how we calculate your DTI. The lower the DTI ratio is, the better you are positioned to take on another debt. While many lenders offer flexible agreements, typically they're looking for a DTI ratio of under about 40%. Okay. So we've spent a lot of time discussing the importance of understanding your credit worthiness so that you can increase your negotiating power when you apply for that financing or a loan. Now let's spend some time discussing auto loans so that you'll know what to look for when you're comparing them. Okay. And when comparing different loans, it's important to evaluate how much you'll be charged by the lender for taking on the loan. To do this, you're going to want to look at the interest rate and the APR. So, interest rate is a fee or amount charged by the lender to borrow money. APR, or annual percentage rate, is the interest plus any other fees that you will be charged annually for the loan. Both figures are expressed in percentages, and both figures are useful for comparing loans. It's important to remember, however, that APR and interest rates are different figures. So when comparing different loans, remember to compare interest rate with interest rate and APR with APR, not interest rate with the APR, if that makes sense. So auto loan interest is amortized. This means that part of your monthly payment will go towards paying off the principal, which is the amount that you borrowed, and the other part goes towards the interest, okay? And calculating auto loan interest can be a bit complicated as it follows kind of a complex formula. Fortunately, there are many free calculators available online that will help you figure out how to do so. To give you an idea of why interest is so important, I want to share an example with you on the next slide. So in this slide, we're going to discuss our friend Thomas. And Thomas bought a car for $25,000 at an APR of 6% for a loan term of 4 years. And hopefully you can see this slide is calculating interest. So when we input this information in an interest rate calculator, he learned he would be paying a total of $28,182.03 at the end of the 4 years. That amounts to about $3,182 paid to his lender just for giving him the loan. So Thomas was clearly disappointed to learn this, but it was too late. He had already signed a contract. So when you're paying thousands more in interest, comparing APR or interest rates becomes extremely important. Next, we are going to talk a little bit more about calculating interest rates with another example. So Thomas, he had a pretty decent credit history. His credit score is near 700. His friend Sari, on the other hand, has excellent credit with a credit score over 800. Even though her credit score was much higher than Thomas's, the dealership offered her the same financing terms with an interest APR of 6%. She knew she could do better, so she actually negotiated with the dealer and was able to reduce some of her financing fees and interest, getting her APR down to 4%. For the exact same car, over the same loan term, Sari will pay about $1,000 less than Thomas, all because she had good credit and she negotiated the terms with the dealer. That is the very important part. So the length of the loan or the loan term can have a big effect on how much you end up paying for the loan as well. And let's look at another example on the next slide, loan A and loan B. So they are for the same amount, as you can see, but we've switched the APR and the loan term. On the next slide, if you guessed there's no difference, you're right. Loan A has a lower APR, but the extra 2 years on the life of the loan causes more interest to accrue, making it cost more. This is why it's just as important to look at the loan term as it is to look at the APR. Okay? Many people agree to lengthier loans because they generally have lower monthly payments, but it may not be worth it in the long run. In fact, if you can't afford monthly payments on the loan with a term length less than or equal to 5 years, the car probably is not in your budget. And another tip that many experts encourage people to follow is even more conservative. And this tip is referred to as the 24-10 rule. On the next slide, we're going to briefly discuss that. So it's a convenient way to help determine if you can actually afford a particular vehicle when you begin shopping around. It may not address every person's financial situation, but some may find it to be a helpful tool. There's 3 things that the rule states. First, you should make a down payment of at least 20%. Secondly, you should plan to finance a vehicle for no more than 4 years. And finally, the total monthly car payment, principal plus interest, plus car insurance should not equal more than 10% of your gross monthly income. The first part of this rule says to make a down payment of 20%. You can apply this rule in 2 ways. First, if you know how much you can put down on a vehicle, you can figure out how much you can spend on the purchase in total. Or if you already have a car in mind, you can figure out how much you'll need to put down based on its list price. So on the next slide, we can briefly take a glimpse at another example. Lane knows she can put down about $500 cash towards a down payment on her new car. And her old car has a trade-in value of $2,500. So that's a total of $3,000. If we divide that $3,000 by 20%, we get $15,000. That's how much Lane can afford based on the down payment rule. But Lane's dream car costs much more than that. It's listed at $32,000. To afford this, Lane would need to put down $6,400. So that means Lane will need to save an additional $4,000 more or settle for a car that isn't her dream car. So Lane can do a little more research to see if her dream car is even in her budget by calculating what she can afford in monthly payments. With a gross monthly income of $5,000, she shouldn't spend more than $500 on her monthly vehicle expenses. This is a great tool to utilize when you are shopping for a vehicle. So now that we've acquired all this background information on car buying and what you should do to better prepared for the process, let's talk a little bit about the car buying experience. When you're ready to buy a vehicle, you should be prepared to put in some work. You'll want to do the research, look at different vehicles and prices, different finance options, and of course, you want to do negotiating with dealers and lenders. Finally, you'll have to ensure you're making the right decision before you sign any contracts. We've included some tips for you when you're ready to buy in your participant's guide on page 9, and I'll go through some of those tips now on the next slide. As you can see, it's titled When You're Ready to Buy. So research your options, very important, okay? Trying to decide on a vehicle make, model, look at the published car reviews from the reputable companies. Once you've narrowed down your list, research the price ranges of the vehicles you're interested in, okay? Secondly, shop around, all right? When you're ready to start shopping for a car, look at both local and online dealers. And thirdly, negotiate, negotiate, negotiate. I think that's the word of the day. All of this shopping around and research will help you negotiate the best deal. Now, next, we want to talk a little bit about examining the contract, because it would be a shame for us to go through all the work of shopping around and negotiating the best deals only to have the contract state something different from what you expected, right? So the Truth in Lending Act, TILA, protects consumers like yourself by requiring the lenders to clearly state the important terms of the loan in the contract. And that includes a clearly stated APR, how long the finance charge is calculated, the dollar amount of the finance charge, the amount to be financed, the total amount to be paid, broken down by the principal, the finance charges, fees, and down payment, and of course, the number of total payments with amounts and due dates listed. Before you sign that contract, be sure to read over all the terms of the loan. If anything differs from what you expected, do not sign the contract. Have the lender or salesperson rework that contract until it reflects to the terms that you've actually verbally agreed to, okay? That is crucial to make the best decision when you're purchasing a car. And then after you've signed the contract and you've been handed the car keys, you definitely need to be sure that you pay your loan back. So let's close this course by discussing some important information about car payments. On the next slide, as you can see, your car payment. First, be careful about paying your loan off early. It's good to pay down your debts, but you need to be smart about doing so. Remember, the longer the life of your loan, the more money the lender makes in the deal. So it's in your best interest to keep you in the loan as long as possible. For this reason, many lenders add prepayment penalties to their contracts. So make sure you check that contract to find out if you may be charged one. And most importantly, pay your bills on time. Late payments can be noted on your credit report and may affect your credit score as well. Seriously late payments could lead your lender to sell your loan to a collection agency, which will further impact your credit. Late payments could also lead to your car being repossessed. Not paying your bills on time can have a heavy financial and legal ramifications to you. So if you have any concerns about your ability to stick to the payment terms on the loan, you may want to reconsider the purchase. A car, especially a new car, it's a very expensive purchase. And an auto loan is a legally binding agreement that shouldn't be entered into without all the proper consideration. Now, just to summarize everything we've discussed today, understanding the car buying process, especially when it comes to negotiations and financing, can help save you money and prepare you to enter into a contractual agreement with a lender or dealer. Be sure to evaluate your needs and learn more about your own credit worthiness before shopping around for the best offers. For more information, you have the more information you have, the easier it will be to negotiate. So purchasing a vehicle is a big investment. The extra effort and time that you take to prepare can save you thousands of dollars, and most importantly, it can save you from a lot of headaches. I want to thank you so much for joining us today in our financial literacy webinar. I'm going to go ahead and ask Roxanne to stop the recording.